In this part of the class, we're going to focus on income and other income as well. So we are going to be talking about different forms that you will have to be focused on and will have to be on the look for. So let's talk about all the various types of income. And for this part of the class, we're going to focus on the most popular forms, the most popular types of income. So let's go to the first one, and let's talk about employment. So you are an employee, and since you are employed, you will, at the end of the year, you will receive a form called W-2. And you know that on that form you have your taxes paid, federal income taxes paid, your Social Security and Medicaid contributions. So you know that this form is what you are going to take to your tax preparer, or what you're going to use as a preparer to file the tax return. Now, keep in mind that there's a lot of customers who have multiple forms. They have multiple jobs. So a customer can show up with 2 or 3 or 4 or 5 W-2 forms. So this is the most popular form. Let's go to the second one, and we can talk about self-employed. And the one thing that you're going to have to be very careful with self-employed is to make sure that this person understands that yes, you for the most part, if you're self-employed, you will have a 1099 miscellaneous. So 1099 miscellaneous. But there's going to be some cases where you are not going to have a form, and you're going to have to report your cash or however you brought in your earnings directly into a Schedule C. So in a later portion of this course, you will learn about Schedule C. But I want you to understand self-employed. Remember that self-employed, it's a very unique situation because you do have a lot of privileges in what you can report and what you can deduct, but you also have a higher tax rate. Let's go to number 3, form number 3. Here's another type of income, and it's called unemployment. And the customer is going to come in with a 1099-G, right? 1099-G, or maybe just a form of, or just any document saying that this person was employed, or this person was unemployed, I'm sorry, and that now here's a form that says that the customer has been receiving unemployment. Most people who receive unemployment also pay taxes out of their unemployment benefits. Let me fix this 1099 right there so you can see it better. 1099-G. And the next form that you are going to deal with, and you know, this is a very important part of the income taxes, is called alimony. And there's actually no form for this. When you talk about alimony, alimony is the amount of money that a wife pays to a husband after a divorce. A former wife pays to a husband after a divorce, or a former husband pays to a wife after a divorce. This is court mandated alimony. It is some sort of a support. So the person who pays it can report it. The person who pays alimony can report these on their income tax returns, and the person who receives the alimony needs to pay taxes on it. This is not to be confused with child support. Remember, it's not child support. And what I'm going to do is I'm going to make a note here. I'm going to say report on Schedule A. Report on Schedule A. And you learned about Schedule A in a previous module. This is Schedule A is the itemized deductions. So now you have four types of income. So we can say income or other income. But let's go to one that people usually ask questions about, and it's called child support. Child support. So the question with child support is, do I report child support, and how do I report child support? The short answer to this is no. No, you do not report child support. And there's no, so no report, do not report, whatever you want to call it. So there's no form in which you can actually put in the amount of money that you paid or that you received. So the person who's paying child support, for the most part, they're able to alleviate the income taxes on that money by having it as a pre-tax deduction. So what happens is that if you go to your payroll company or human resources company and you say, hey, I have to pay child support, they're going to take the money of child support before they actually tax you. So, and I always, give a short example. If you made $50,000 if you're, generated $50,000 in salary in a year, so $50,000 in salary, right? There's your salary, but you paid $10,000 in child support. So there you go, $10,000 in child support. In reality, you only brought home $40,000. So this is your taxable amount, right? So there you go. We can say that this was your gross pay, right? This is how much. This is your salary. And we can say that this is the amount of child support that you paid. So since you're not bringing this money home, since you're not taking this money home, the IRS is also not going to charge you taxes on that money. So you can say that this $10,000 is your child support, right there, child support, right? So the one thing to understand is that if you are doing this right, the person who's paying the child support shouldn't pay taxes on it, and the person who receives child support also doesn't pay taxes on it because it's not income, it's support. But the person should only be paying, if this was your salary, right? $50,000 was your gross salary, minus $10,000 in child support that you did not take home. If you did it right, if you did the process right through the Department of Human Resources, and they tax you after they calculated your taxes after they took out child support, then you won't find yourself paying income taxes on money that you didn't take home. So you will only pay taxes on the $40,000, right? This is where you would pay taxes. So, all right, let's talk about number 6. Number 6. And I want to talk about Social Security benefits. So, Social Security benefits. Very important. This part, is for you to understand this part. Social Security benefits. Why is it so important? Why do you need to understand this? Well, you're going to have a lot of customers coming to you asking you all different kinds of questions like, hey, how do I do this? How do I do that? You got to understand how, all the situations work. So here you go. Social Security benefits. The things that you need to know is what kind of benefit, right? So you need to ask yourself those questions. You need to ask the customer those questions. What kind of benefits? We're talking about survivor, so we can say survivor benefit. Right? What is the survivor benefit? Survivor benefit is a one-time I believe it's $255. So one time $255 that you're gonna get in your tax return if you became widow or widower. Another type of Social Security benefit is something that you will see a lot, and this is the disability. So disability benefits. And this is something that you will see a lot from a lot of your customers. And those disability checks are not required for you to report to the IRS. So because they are what's called their support, so they're not actual taxable income, right? And then you're going to have your Social Security pension, right? And your Social Security pension, for the most part, won't be taxable, so you don't have to worry about it. There are those pensions who are employer sponsored, so those you do have to pay taxes on it. So if a customer brings a pension, brings to you something, a retirement pension that is not government related, you're going to have to report that on your income tax return. Usually you will report that on Form 1040, line 22. So taxable pensions, you should write this down here. It is taxable pensions are reported on 1040, line 20. Okay. Line 20. So it's gonna be called other income, and you'll go in there and type the amount of money that you receive for that taxable pension. Or sometimes you will receive something called 1099-R for retirement. So 1099-R works for retirement distributions and other pensions of that nature. So distributions of income, distributions of earnings, distributions of profits, of things like that. But it's used a lot for pensions, so very important. And then the last thing we got to worry about is understanding the 1099s, because we talked about 1099 miscellaneous earlier, but there's more 1099s. So I just told you of 1099-R, so 1099-R. Usually you're going to do things like retirement here. So retirement. So you're going to have retirement. You're going to have also 1099 int. And this is going to be interest that you receive from the bank. So just to give you an idea, if you have a bank account that's generating interest for you, so the IRS is going to call that interest income. So you're going to have to pay taxes on that. You're going to report that on Schedule B. Schedule B. And later on, we're going to talk about this parts of the schedule, these parts of the class. We're going to focus directly on these forms. Then you're also going to have 1099 div, so 1099 div, so div, and that is dividends and stocks and things like that. So for this example, let's call it dividends. Dividends, and this is if you have stock options or things of that nature, you're going to receive a 1099 div. If you sold your stocks, you're going to receive a 1099 div. And that 1099 div is actually reported on Schedule B as well. So got to make sure that you understand where this is reported. So here's a couple of more 1099s. We talked about 1099 miscellaneous. Earlier we talked about 1099 G, which is unemployment. But here are other types of income that will come in the form of a 1099. You have a 1099-R for retirement, and you will report that directly into a 1099. So you don't have to use a schedule for that. Then you also have 1099 int, and you will report that on Schedule B. And you have 1099 div, which you will report directly into the Schedule B as well for dividends.
This is the end of the other income module. In a later point in this course, you will learn how to enter each form into the tax system.